In the financial markets, happy days are here again, something that would have been inconceivable to think about just 2 months ago. In today's market update, we are going to look at a lot of the data that's come out in the last 2 weeks that has helped power the markets back. Let's dive into it. My name is Will Allen with Centera Capital. We are a longtime RIA. In our last video, we said we'd love to get to over 1,000 subscribers, and thank you very much. We soared past 1,000. We're near 1,100 now. We appreciate it. Let's talk about the stock market. It has been an eventful last few months. And in fact, if you go back 2 months, that's when the markets were at their lows after an over 20% sell-off. There was absolute chaos and pandemonium. We helped guide clients through that time. Now it's the opposite. Markets have had what we call a V recovery. You can see there in the chart of the S&P 500, and that is year to date. And we're filming this video on June 11th. You will see it has had a very good recovery, and that has been powered by a lot of different data that's come in the last few weeks that we're going to go over today that really has all been very good. We're going to start off by looking at a data set that we really haven't talked about very many times. This is personal income. This measures primarily wages and salary growth, but also includes Social Security and business income. And you will see month over month, this came in at 0.82%, which that's an almost 10% annualized number. And if you take a look over the last few years, other than January of 2024, which that jump was primarily because there was a huge jump in Social Security, this is the best month in several years. And why this is so positive is our economy here in the US is primarily powered through consumer spending. And when they're getting this kind of jump in income, that is very good news. Now, we have another chart that takes a look at this same data set. When you look at it this way in the bar chart, you will see that February, March, and April have all been much better than basically the most of the last year. You can see a clear uptrend here. So we're very happy with this news. And when this happened, all the consumer stocks in the market pretty much went up nicely here about a week or two ago. That was a really good piece of news. Now, let's take a look at earnings estimates. And what we are talking about here are analyst forecasts for where earnings are going to be for the S&P 500 over the next 12 months. This is also looking at year to date. You can see that for the first couple months, this was steadily rising, meaning analysts were thinking that companies and their profits were going to be going up over the course of the next 12 months. Then you can see the yellow bar there where it says April 2 tariff announcement, and this starts to go lower as analysts were forecasting, hey, this is not good for profits. Profits may not be as strong in the next 12 months as what we were thinking. But notice that once we got into May, this has been back on a steady ascent and is at a new high. $280, meaning this has really been driving the stock market because we've said in the long run, what company profits are drive stock prices more than anything else. So this is very good news, is despite the chaos around tariffs, right now analysts are hearing very good news from companies about where their profits are going to be in the years to come. Okay, now on to rapid fire, where we go over a couple other key charts that I think you need to know about. And we're going to start off looking at GDP, gross domestic product, measures the growth in the U.S. economy. In the first quarter, that came in at a negative number. But we said if you went beneath the surface, that was because there was a significant amount of imports here in the U.S. trying to get ahead of the tariffs. And if you looked at consumer spending and business investment, that was actually pretty good. Well, guess what? Now for the second quarter, right now, estimates are for a 3.8% growth rate with, again, if you go beneath the surface, it's expected that consumer spending and business investment are going to be good once again. If this comes in anything north of 2%, that is going to be good news. So 3.8, that is a phenomenal number, and that's a really good bounce back after that first quarter. Okay, next chart in this rapid fire. Small Business Optimism Index. This is a measure of over 10,000 small business owners every month. It goes back a long, long time. You can see that this thing skyrocketed higher late last year, and then the first 4 months of 2025, this was going down. The uncertainty around the tariffs was a part of this. Also, questions around what's going to happen with tax policy is right now the biggest uncertainty that this group has. But we talked last month that this had gone down 4 straight months. We wanted to see this start to go up, and that's exactly what we got. This most recent number, 98.8%, so this jumped almost 3 points. We're very happy to see this. Hopefully this grows up over 100 next month, because small business owners make up a lot of new job growth in this country. We want to see this group doing well. All right, that brings us to the last duo of charts here, and this is on the inflation front. We have had 2 pieces of news that has been good. The first came about a week ago, was the PCE price index year over year. This is the Fed's favorite measure of inflation for consumers. This, you will see, skyrocketed back in 21 and 22, got to over 7% year over year, has been going down recently, but notice 2.15% last month. When all of the tariff things started to happen back in March and April, a lot of people thought that inflation was going to go up a lot. But we did a video in early February on tariffs, 15 minutes for the, I would call them nerds who can subject themselves to 15 minutes of only talking about tariffs. But we went and did a case study of 2018 and 19 and said, hey, we did not have an inflation problem back then when there were a lot of tariffs put on across countries around the world. Well, what we're seeing here, 2.15%, is almost at the Fed's 2% target. A lot of economists thought this was going to go up to 2.4, 2.5%. That did not happen. So that was the first good piece of news on the inflation front. Then today, June 11th, we got the CPI, Consumer Price Index, and this month over month came in at 0.1%. Okay, that means prices barely went up. I have a chart here that goes over all these different categories that I want to focus on. New vehicles, used cars, and apparel all went down last month. Now, this was a shock because a lot of people thought these were areas that were in the bullseye of the tariffs, and so those prices could go up a lot. Well, the opposite happened. These all went down last month. So again, we're going to continue to watch this data each month. We're not out of the woods yet, but early on, the Fed has to be happy looking at the inflation picture as it relates to tariffs. So the key takeaway today is that in the last couple weeks, there have been numerous data releases that we just covered that have all been very positive for the economy and very positive for the stock market. That brings me to my closing thought, which is if you take a look at a chart of the stock market over the last couple months, we had significant volatility and chaos. We helped guide our clients through that time period, and the number one way we did it was communicating with frequent videos. And for the portfolios, what we did is we upgraded the portfolios in quality. We took a look at where are the high quality parts of the market where we want to take advantage of the baby being thrown out with the bathwater, and that's exactly what we did. If you're not getting that kind of quality advice from your advisor, reach out to us. You can go to centeracapital.com to the contact page. We'd love to have a conversation with you. We have a 3-meeting process to see if we're a good fit. Thanks for watching and take care.